On behalf of Innovative Healthcare Business Solutions, I would like to welcome you to a short tutorial on insurance contracting and 5 items to review in a new contract proposal. Innovative Healthcare Business Solutions is a full-service medical practice management company. Our services offered include items such as contracting and credentialing, but we also offer non-traditional services such as project management, leadership training, and creating culture and mission statements. Our service offerings are detailed on our website as well. Our website address is www.myibis.com. That's www.myihbs.com. Just a quick disclaimer. Please note that these 5 items to be discussed are not the only items that should be reviewed in a contract. Therefore, any new contract should be reviewed by someone with knowledge of contracting and reimbursement. In addition, these 5 items are not listed in any order of importance, and each one is equally important when reviewing a new insurance proposal. The first item is a timely filing clause. A timely filing clause is a time frame a provider or facility has to submit a claim for payment. A standard time frame for a commercial contract can range from 90 days up to 1 year. A 90-day time frame is the minimum amount of time that we would recommend accepting for any new proposal. While most claim filing will happen well ahead of this time frame, you need to make sure that you're prepared for any unknown circumstance. An example of an unknown circumstance would be the potential of an EMR switch, which would be an electronic medical record, or even staffing changes within your office or facility, such as a biller or coder that's leaving your facility and you have to replace that person. In addition, every contract should address corrected claims, underpaid claims, and recoupment of overpayments by the payer. A corrected claim is a claim submitted to a payer that contains a change from the original billing. These items can include such things as a CPT code change, a modifier change, or even a change in policy information. Providers and facilities need to have the time allotted to ensure that they can submit changes if needed, and they will not be penalized by having the claim denied by the payer. An underpayment clause should state that a time frame for a facility or provider to identify an underpayment and still be reimbursed by the payer. Finally, there should also be reference to an overpayment clause as well. You want to make sure that this clause is clearly defined regarding the time frame for a payer to recoup funds from you that may have been overpaid in error. A lack of this clause or an overpayment clause in total could leave you vulnerable to payer takebacks years after the services have taken place. And then finally, with these 3 clauses in mind, corrected claims, underpayments, and overpayments, you also need to make sure that you review any state policies in reference to medical claims timeframes, because they may actually contradict or conflict with the current proposal in front of you. And you want to make sure that you have reference to that state policy as well as reference to the policies that are being provided by the payer to make sure that you're not going to run into any issues sometime in the future. For those of you not familiar with insurance payer policies, this is our number 3 item to talk about. These policies are listed online by commercial insurance payers. Many contracts, especially current contracts, make reference to insurance payer policies, and these policies, when effective, can become part of the actual contract. These policies include items such as coverage rules for procedures, items covered and then even recently not covered, and even things such as protocols needed prior to performing certain procedures. Unfortunately, payers typically will not remove reference to payer policies, and therefore we recommend creating a protocol within your office to review these on a consistent basis. Many payer websites have also made it easier to follow some of these changes by allowing providers and facilities to subscribe to monthly payer newsletters that also contain payer updates. However, with that said, I would advise that you do set a protocol in your office to also review the online website to ensure there's nothing that is missed. The 4th item is fee schedule amount. The fee schedule amount needs to be reviewed closely to ensure you know what you're truly being paid. Fee schedule amounts can be based on many different compensation models, so just make sure you've reviewed it by someone with a background in payer contracting and revenue cycle. The contract should be based on current year, or the contract could be based, on current year Medicare, which is published annually and updated quarterly. The pros to having a contract based on current year Medicare is that you know the base fee schedule and it's public, so you can go and pull it at any time. It does allow for easy review of the proposed contracted rate since it is a public schedule and you can review it in an easy format. The negative to having a current Medicare fee schedule as the base of your contract is that Medicare typically has been trending down over the past few years, so if that continues, this could mean you could be subject to decreases in the future of your commercial contracts, something to be aware of if you're just looking at this for the first time. A fee schedule that is determined by the payer is another common model we see. These fee schedules can be changed by the payer to potentially benefit them and not the provider, so it's something to really look at closely. If you do happen to receive a payer fee schedule, it's definitely recommended to review it against Medicare for reference purposes. If you're not sure how to do this, feel free to reach out to us for assistance and we're happy to help. Many providers will run into one of the two fee schedule models we just discussed, but with an addition of a tricky little gotcha. So we wanted to go ahead and mention this here. Definitely make sure that your proposal does not contain a lesser of provision. Typically, the contract may read something like the lesser of the current year Medicare fee schedule or usual and customary. This extra language basically gives the payer the opportunity to pay you any way they feel. It's advised that you remove this other lesser of provision and just stick to the proposed fee schedule amount. Finally, make sure to review that all the services are paid at the same rate. If not, that's not uncommon, but you do need to review the contract a little bit closer. Many times you may receive a higher rate on a lower utilized service, while a higher utilized service is at a lesser rate. We typically see this tactic happen when a provider or a facility is in a contract renegotiation standpoint, and this is due to the payer also having access to your data. So something to be aware of. Don't just take your rates, and especially if you have more than one, at face value. You definitely want to take a look at that against your data. And finally, all contracts will contain a contract time period and a term notice period. A contract time period is the length of time the contract would be valid, and many of them also contain an auto renewal policy as well. The standard contract time frame ranges from about 1 to 3 years. Anything greater than that is really a risky proposition just because of how crazy reimbursement changes have been. The term notice period is a period of time where you have to notify the payer you will not be renewing. Typically, this time period is used for a negotiation tactic by a provider or a facility. A 6-month time period is standard for notifying the payer that you're possibly not renewing, and it also signals if you're going to be looking to renegotiate. It's imperative that you reach out to the payer within this time frame of this notice period. Otherwise, they may pass you up if you are looking to renegotiate your contract. So just take a look at that notice and period carefully. As stated in our disclaimer at the beginning of this tutorial, this is not an all-inclusive list, and we advise that someone with contracting and reimbursement knowledge review the proposal in detail. If you do not have someone to do this on your behalf, we would be happy to assist. Please reach out to us on our website, www.myibis.com. It's listed here on the screen, and head to the Contact Us section and fill out the form, and someone will be reaching out. Thank you so much for your time today, and we hope you enjoyed the presentation. Thanks.